Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Thursday. In fact, you're watching a Tixee Live watch-along, by the way, a watch-along of the US GDP. Now, before we get into all of that though, of course, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So, yes, here we go. Oh yeah, here we go. US, hello, hi. Oh yeah, here we go. US GDP time. Okay, and this is the watch along of the US gross domestic product, Q2 primarily. Okay, it's due in about 10 minutes or 8 minutes, actually. Now, for those of you who are new to trading, what the GDP is, okay, let's give you a brief explanation of what it is. The gross domestic product is released by the Bureau of Economic Analysis, and it illustrates the monetary value of goods and services produced in that country during the period of time. In this case, Q2, we're talking about. Now, it is a key to the market, or the market sees it as key information, because it indicates the pace of a country's economy, or how quickly a country's economy is growing or decreasing, for that matter. So basically, it's the health of a country's economy. Okay. Now, by standard, it's not always the case. A higher reading could be positive for that currency in question. A lower reading could be negative for that currency in question. Now, what's interesting, I thought what we'll talk about this, because we're building up to obviously the event, which is happening in 7 minutes. Everybody understands what a GDP is, what the gross domestic product is. It's like I say, it's telling you the basic health of a country's economy, but what makes up the GDP? What do they look at to see or calculate the GDP? Now, I'm not going to go through the complicated calculations of what they do with the GDP, but I wanted to break it down for a second. What is taken into account for the Bureau of Market Statistics to say this is what the GDP number is? And I thought we would sort of go through a little breakdown of what makes it up. Number one, okay, is personal consumption expenditure. Okay, basically consumer spending. Because don't forget, those of you who've watched me before when we've talked about retail sales and things of this nature, the whole, the modern day economy does really heavily rely on us spending our money. Okay, if we don't spend our money, then the economies suffer. Okay, in fact, consumer spending in the US contributes to nearly 70% of the total US production, not GDP. I'm talking about production. Okay, so things which are included with personal consumption expenditure includes the likes of durable goods, which is goods like cars, large appliances, long-term lifespan goods. Okay, undurable goods like clothing, food and fuel, services, the banking sector, healthcare sector, and education sector. Now, those of you who joined me, I think, what was it, 2 days ago? Or was it, 2 days ago, we talked about US durable goods, which came in worse than expected. It came at 0% versus the negative 0.6 plus 0.6% expected. So there is signs, obviously, that the consumer spending is slowing down. No wonder we have high inflation and things of this nature, making it more and more expensive. Okay. The other thing which is taken into account, okay, is business investment. Business investment. Now, business investment is companies who are invested into their production line to make more consumer goods. Because obviously, if the consumers are buying more, then they need to invest more in how to produce the goods for the consumers to buy. So they measure this as well. As well as that is fixed investments. In other words, the amount of money companies are spending on equipment. Okay, so again, it makes sense. If the consumers are not spending their money, then they no need to spend on new equipment to make the goods, is it? Okay, the other thing is the change in private inventory. How much companies have in their inventories? How much more produce are they buying? Now, don't forget, we've had the likes of Walmart, Target, have had a lot of inventories which they cannot get rid of. Target in particular has a lot of inventories they cannot get rid of. So that is taken into account as well, how much stuff or how much items and products they have in their warehouses to sell to consumers. So again, if the consumers aren't buying it, it's going to be building up, isn't it? So that also makes sense. The other part of it is government spending. How much is the government spending on the likes of new initiatives, things of this nature? Because the governments tend to spend more when the economy is booming. So again, this is taken into account. And the final thing which is taken into account, okay, is net exports of goods and services, okay? Now, here's the thing, the US imports more than it exports, okay? And the truth of the matter is, exports actually add to GDP. So it makes sense, because if I'm selling more stuff abroad to, say, the UK or to Europe, that makes me money. But if I'm buying stuff in, it's an expense to me, isn't it? So if I'm selling stuff and they're buying it, good for me or making me money. If I'm having to buy it in, not so good. But the only good thing about this at the moment, and this is to be taken into account and to be considered as well, is we have a very strong US dollar. So yes, they import more than they export, but because there's strong currency at the moment, the strong dollar against the euro, the sterling, etc., it's cheaper for them to buy these goods in. So there is that as well. But anyway, that's what makes it up. I just thought it'd be interesting to break it down so we understand all these factors, all these other things we look at, like durable goods, also builds up quite often to what the GDP reading could potentially be. Now, the expectation is for it to come in, still is a negative, okay, negative 0.7%. Last time it came out as negative 0.9%. So it is it's still supposed to be negative, but better than anticipated. But really, I think what the market, I'm not going to say this is going to be a gigantic big mover, because I think the market's transfixed, to be honest, on what Powell is going to say tomorrow. They're more interested in that. But market may look at this, and I'm going to go through some scenarios in a minute. They may look at this and go, okay, well, this is going to change what Powell says is tomorrow, because obviously the Fed have said they're becoming more and more data driven. Okay, so they have said this might impact what he says tomorrow. So it'll be interesting. Now, markets have priced in, because this is all about what happens in September, have priced in a 60% chance of the Fed doing 75 basic point rate hike in September. But really, the market is trying to look and see what impact this data could do to Powell tomorrow. Okay. At the same time, coming out, which I'll also discuss when it comes out, is US initial claims. At the same time, expectation is 253,000 versus 250,000 expected. Now, again, I'm talking too much. I've only got a couple of seconds. So let's go through some quick scenarios. Scenario one, it comes in as expected. Market could potentially ignore it, and very little reaction because it's already priced in. Scenario two, comes in worse than expected. US dollar gets weaker and the markets bounce higher as they expect Powell to then go easy, which I think will be a false fallacy. Scenario number three, comes in better than expected, as in higher, as in maybe a positive, or maybe negative 0.2, something like that. US dollar bulls could rush in, market becomes more pressured as expectation of Powell being more aggressive tomorrow builds. So we get stronger dollar on the back of that. Scenario four, no matter the number, the market ignores it and is focused on Powell tomorrow. So that could also potentially happen too. Anyway, enough of that. Enough of me talking. It's about to happen now. Let's see what it is. Let's see if there's any surprises, because last time it did surprise us. It did surprise the market. Let's have a look. Let's have a look. Let's have a look. Let's have a look. Come on, come on, come on, come on. Come on, I've got my trusty little mobile here to bring it in. Okay. Okay. GDP, quarter on quarter, quarter two, is announced at negative 0.6%, 0.6%, okay, 0.6%, which is better than expected. So it's not so negative. So that's a good thing. That is a good thing. Initial jobless claims comes in at 243,000 as well. So what we're going to be seeing in the market right now. So that is, it comes in basically lower than or higher than expected. It's because it's negative, only negative 0.6%. Okay, not negative 0.7. So slightly better than anticipated. Slightly better than anticipated. Let's see what's happening in the market. Yeah, I know. Well done for following, though. Thank you. Very good. Very good. So anyway, let's have a quick look. So, like we said before, if it was better than expected, the market may start expecting then that the Fed to be more aggressive, because it's a good sign that the GDP is not as negative as possible. The euro, I can see, yeah, again, we've seen dollar strength against the euro. Let's see the dollar yen. Yes, okay, we can see dollar strength against the yen on the back of this straight away. Currently trading at 136.76. How about the sterling? How's the sterling doing? Okay, yeah, sterling, not a gigantic reaction. Not a gigantic reaction. Still finding a bit of support around 1.18172. Let's have a look at gold, see how gold is doing. Okay, yes, stronger dollar against gold as well. $1,758 on that. US 500, S&P 500. Again, yes, the market getting a little bit more cautious. So a little bit lower, slightly lower on the back of this. It's like I say, it's not a massive movement, because I think the market has all eyes really on tomorrow, what Powell says. But realistically, at the moment, as it stands, we're actually seeing, like I say, slightly better. Scenario 3 comes in better than expected. So not as bad as it was. Still negative, but only negative 0.6 this time. So US dollar bulls are a bit more in control again. And obviously the anticipation now is that Powell could really be really, really aggressive tomorrow. So there we go. So yeah, okay, not like a huge mover like the US CPI was the other day, but again, it's still something to take into account. Don't forget, you can ask me comments anytime you wish. So you reckon that was not a bad guess, though? I reckon zero, negative point, much difference from last month, not much action. Well, like I say, it's not that much different, but 0.6 is slightly better. Again, it's better than expected. But like I say, the markets is really more, to be honest, more transfixed with what Powell's going to do. Again, like I say, the market, how the market's seen it is that if we can give them more confidence for the Fed to, that the US economy is okay, as in the GDP, it's not as bad, it's slowly getting better. The labor market is still good. And like I say, those initial claims is good. Those initial claims came in a lot lower than expected. What was it? 243,000 versus the expectation of 253,000. So that's good. Don't forget, US initial claims is the initial number of people signing on for unemployment benefit for the first time. So that's actually pretty good. That means it's slowly decreasing at the moment. So the labor market is strong. Yeah, I totally agree with you. It does give the Fed the opportunity to be more hawkish, which I always thought they were going to be anyway. I always thought the markets were kidding themselves that they will go light. But yeah, it gives them more opportunity because they're more confidence that, hey, GDP is better, slightly better. It's still negative, but it's better. Initial claims is a lot lower than anticipated. So again, it gives them confidence. So yeah, I agree with your opinion with that. That potentially means they could go and be a bit more aggressive. Don't forget, you can ask me questions anytime you like SMF 790, or share me your opinion. Tell me what you think is happening. What do you think the Fed will do? Or we could do a poll. How low does everybody think the euro could potentially go? Or do you think we're going to see a recovery in the euro? Okay, not a problem. If you think of a question later, put it in the comments on either Facebook or YouTube. I will see them, and I will reply to them next time I will go live. Don't forget, I'm going to go live again in about an hour and 20 minutes time to cover the US session. We're going to see if there's been more of an impact on this announcement. And really, like I said, I really think the market is building up to to obviously Jay Powell's speech tomorrow. We have other Fed members speaking today as well. Say Jackson Hole starts today. So that would be quite interesting to see what other Fed members may say. I think we've already had one member, Fed George, who's quite Miss George, who's quite dovish already. She's the Fed governor for Kansas. She's quite dove, but even she said today that tightening has to continue. So, so anyway, we should have more developments on that. So don't forget, you can join me later today at 2 p.m. UTC to cover the US session and any more future developments. That's not bad. That's not a bad question. Yeah. To be honest, it's dollar. The euro is struggling with a number of two factors. Dollar strength. Okay, dollar strength because it's a safe haven. Okay, and yes, obviously the gas situation, the energy crisis in Europe, is horrendous at the moment. It is horrendous, and most likely, yes, it would likely to keep it under parity, even if they manage to improve their inventories or the amounts they have in supply. We still have dollar strength. You might see a teeny weeny bit recover close to parity at some point, like it tried today with a little bit of market, let's say the market optimism we had today. It got above the 1,000 level, but since then it's dropped back down again. So you will see it fluctuate before that. But I don't think the gas situation is going to improve. I can't see it. I see that's just something we're building up to now. So it could get even worse. But it's a very good question. Very good question. Thank you. Yeah. Okay. So anyway, if there is no more questions, not to worry. Don't forget, if you're watching me on Facebook, by all means, give us a follow if you enjoyed this little video. If you're watching me on YouTube and you enjoyed this video, found it useful and interesting, subscribe if you like. Hit the notification button so you know next time I'm going live. If you've liked this video and you put up with me, my over-the-top enthusiasm for the markets, which I just simply cannot help, give me one of those. It's nice to know that you like what I do. I've got a couple of likes already, which I really appreciate. Anyway, till next time, which of course will be 2 p.m. UTC later today. Don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.